Welcome to Target Market Insights, the multifamily and marketing podcast. Each week, John Kasman interviews multifamily and marketing experts to teach you how to find the best places to invest, attract investors, and grow your portfolio. You are listening to Target Market Insights with your host, John Kasman.
Welcome to Target Market Insights. I'm your host, John Kasman. I want to thank you for joining us for another great episode. Now, if you're enjoying this show, do me a favor and leave us a 5-star rating and review. And if you get a moment, like right now, don't forget to hit the subscribe button. That way you don't miss an episode and you can help share the show with more people who can get great value out of it. Now, today we're going to be talking to Daniel Holmlund. Daniel Holmlund works as an engineer at Intel, focusing on industrial automation and software development relations. Now, he has a syndication company with 374 units under management in the Houston and Austin metro areas. Daniel also runs 2 real estate investment clubs, one on the Intel campus and another in Portland, Oregon area named Wilamete Investor Network. He is the founder and investor in W.I.N Capital LLC. Let's welcome to the show, Daniel Holmlund.
John, it is a great honor to be here. Thank you very much for having me.
Absolutely. Daniel, listen, it's really good to talk to you as we're recording this right before the Best Ever Conference. We're going to see each other shortly here. But for those listeners who are not familiar with you and your story, why don't you take 60 seconds and fill in some of the gaps as far as your background and how you got into real estate?
Sure. I've been in real estate since early 2002, but mainly in single-family homes. I got interested in multifamily around 2016. And at that point, I had the decision of whether to go and try and find a mentor or try and find a company that was really executing well and make myself useful to them. So I decided to do the latter, being the somewhat of a cheapskate that I am. But I found a group down in Houston, Texas, who was taking on junior members of their teams. And originally, I invested with them as a limited partner in a 56 unit. And I started talking to them about how do you do your underwriting? How do you do your legal works? How do you do your insurance? Tell me about your business plan. And we developed a relationship, and I've gone on to do a couple of syndications with them as a general partner. So we're in a 122 unit down in Houston and then 196 unit also in Houston. And since then, I've got the bug, and I've also got the bug for helping other people use real estate as a way to create passive income. A lot of people just put their money in the stock market and forget it. And I think that by getting to know people and operating in teams, you can build a better financial statement for yourself. You can build a better life for you and your family. So that's me in a nutshell.
No, listen, a lot of great things there. You talked about, partnering with other groups and kind of being a junior partner, starting as a limited partner, then kind of becoming a general partner on the deals with that group, on those deals in Houston, and really looking at how do you help now connect with other investors who maybe are focused on the stock market and help them see some of the benefits and opportunities that are available through commercial real estate. For those individuals who are focused on the stock market right now, maybe don't know a lot about commercial real estate or multifamily, what are some of the benefits or some of the things you tell them about investing in multifamily?
Well, the first thing that I tell them is that I myself am actively investing in real estate as opposed to the stock market. And the main reason is because I like investments that I have 3 to 5 year projections on. When you buy real estate and you come to a company that's experienced in syndication or in ground up development, they have projections for exactly what their income is going to be for the next 3 to 5, maybe 7 years. And if you're looking at investments that are conservatively underwritten and you can see your projections going forward, you have a much better ability to project your own financial future. And so I tell people that I'm in the process of converting my portfolio over to investments that have business plans and projections. But in addition to that, of course, there's the standard things that you say about real estate. There's great tax benefits. It's something that you can personally affect by putting your own effort into it. And so some people like that, some people don't. I like that in real estate, there's a spectrum You can be on the passive side and have somebody else do the investing for you and you just contribute capital. Or you can be all the way on the active side and actively go out and find deals and put them together and raise funds. So there's a nice spectrum for everybody that's there. People who want to be active and people who don't want to be active. Everybody can participate in it. And so I think with a little bit of investor education, people can really improve their lifestyle and improve their financial health.
No, absolutely. Listen, a lot of great benefits from investing in real estate, multifamily in particular. You talked about the control aspect, which I agree wholeheartedly. The ability to project, have control over the decisions that are made and how you can pivot and how you can put in some risk management. And you just don't have that in the stock market. There are a lot of things that are being speculated on. Most of us don't know the CEOs of many of these companies, and we can't figure out what their 5-year real plan is. And even if you could, you don't know if that CEO is going to be in that position in 5 years. So not as much control in the stock market. So, there are ways to certainly get in and be passive in real estate. You don't have to be a landlord. I think some people assume you have to be a landlord to invest in real estate. That's not true. There are definitely ways to get in. So let's talk about that first deal that you did, Daniel, right? So you kind of came in as a limited partner on that deal in Houston. You mentioned that you were asking questions to those operators. What was your mindset like when you were exploring that first investment? What research did you do leading up to it? And what ultimately gave you the comfort to pull the trigger on that first deal?
Sure. So the group that I found down there, they were operating in Houston, and they had been operating for about five years. And the first thing that I did was that I went and looked at the different properties that they owned. And I actually went to the county website and went to look up the properties to actually make sure that their company name was on that property. So there's a lot of due diligence that you can do at the county level, just understanding what's in the records. But then after that, looking at what the properties were doing in terms of just apartments.com, what the tenants were saying about it, and then asking them for references with other people that they've networked with. And of course, you always want to be careful with asking somebody for references on themselves. But after digging a little bit and calling and asking around, you can get a feel for whether these are people that actually value their investors and are true to their word, and whether they're executing well. And so one thing that you like to see is a partner who is purchasing buildings, and they have a team on the ground that does all of the due diligence work up front, find out what that looks like, a team that does the renovation work once the closing occurs, and a good investor relationship team that keeps everybody informed of what the progress of the property is. So if you can find an investor or a syndicator group and research them like that, you can get a really high degree of confidence that they are who they say they are and that they're going to execute on their word. And you really should do that, because there are a lot of people out there who don't necessarily know what they're doing in real estate, and they're in it because they're new and excited. And you should really be attracted to people who have been doing this for a while and who have built a track record.
You talked about, finding a group who is doing the due diligence kind of prior to closing on the property, as well as understanding who's going to be leading the renovations, and just being able to execute and deliver for their customers and their investors. What are you looking for when you talk about the due diligence and the renovation plan?
So I want to understand from the management's perspective, what exactly is a deal breaker in terms of due diligence and what isn't. So going into this property, for instance, I want to know things like some investors don't like properties that have flat roofs. So I'm going to go in there and ask them, hey, what do you think of this property that has a flat roof? Give me your investment philosophy on this. And so just by asking questions that have to do with due diligence to the management, you can understand a lot of where they're coming from. So that was more of what I meant in terms of due diligence. What types of properties are they looking for, and what are their criteria for acquiring a property?
Got it. Makes sense. Yeah, and I think that's important to understand too, because to the point you're getting at is the clearer they are on what a deal is and isn't, the easier it is to understand, how they're not just projecting, but they're anticipating, challenges, how they can pivot through things that come up. And if they're not thinking about things in that level of detail, then that gives some cause for concern. So you should definitely understand what a deal looks like, what your concerns are in the due diligence with any team that you're working on. So you decided to move forward. What was it about that deal or that partnership group that gave you the comfort to say, yes, I want to move forward with these individuals and with this deal?
Well, one of the things that I really liked about them is that they were reaching out to more junior people like myself. And they were looking to actively mentor junior partners so that they could build their network going forward. And I think that this is a crucial strategy that a lot of people miss, because there's a lot of opportunity in sharing the knowledge that you've built up with somebody else and then having them go out there and be a future partner for you. So this particular group took me on, and they asked me to do tasks for them. For instance, I did a lot of research for their property management groups. They were growing fairly quickly, and they needed to bring on some top quality property managers. So I went and found the top 15 property management companies in the Houston area and tried to rank the people that were in that to find the top 10 people in each of those groups. And I came up with a way of attracting those people or offering them jobs. And so I put in work that made myself valuable to them. But at the same time, I had access to them and I was able to ask questions all the time. So in effect, I created my own, mentor and mentee relationship with this group. I was doing work for them and they were educating me.
Yeah, and I think that's lovely because you made it a mutually beneficial relationship. And I think a lot of times, people are looking to be educated, but they're not necessarily adding value back the other way. And don't get me wrong, I think it's great if you're investing in a deal, but a lot of times if you have especially a larger deal with a lot of investors, there just isn't enough time to really give everyone kind of that one-on-one guidance that they're looking for. But the fact that you were coming to the table and helping them do what they needed to do really allowed you to create more value. And I think that goes to show, how you can add value, how you can get the education you were looking for. Earlier on, you talked about being a bit of a cheapskate and not wanting to pay for mentorship, so instead going the junior partner route. And I think it really comes down to, it's not so much you being a cheapskate as much as it is understanding how to create value. And if you're willing to take time out of your day to help create value and be a part of the team, then there may be a role for that. Sometimes there is a role for someone like that, and sometimes there's not a role for someone like that. But it does at least allow you to ask the questions and be inquisitive and come to the table just with the mindset of how can you help, how can you create and add value, versus just coming to the table saying, hey, here's what I want and here are the returns that I'm looking for. What led you to taking that approach to being open to participate and finding out those property manager options and being more hands-on, especially since you were really a limited partner?
Sure. So one thing that I should say here is that now that I have done several deals, I do have a mentor now. So initially, a lot of the education that you find, there's plenty of it out there. You can go and listen to, your podcast, John. There are podcasts out there that will teach you incredible amounts of information. And so when you're really getting started, I see a mentor as having two roles, and that is, first of all, education, and second of all, providing feedback and drive. So somebody to keep you accountable to your tasks. So in those initial stages, I'm a driven person, and I knew I could go out there and find that education, and I could find people that would work with me on that. But as I started to do more deals, we did 122 units and 196 unit, and I developed relationships with the brokers that were there in terms of the loan brokers. I got my Fannie Mae card. Once I reached that point, I realized, okay, if I'm going to take my investing career to the next level, now I need to go out there and find partners, and I need to go get a mentor, because a mentor is going to help bring me from a person who's participating in a general partnership in a smaller way and help me grow that to running my own deals and doing larger deals with people.
No, and
And so,
listen, I'm glad you clarified that, right? So, because it's the point you just hit is a crucial one because there's a lot of free education. And I think people, when you think about multifamily, I'm an advocate that I do believe that if you are going to partner with other people, you should hire a mentor. Now, I do believe that you should get as much free education as you can so you are clear on when you hire a mentor, what is it exactly that you want to do and what are you looking for? Because I think sometimes a lot of people go out and they hire a mentor right away, but they don't know what they actually want to do. So they're not able to actually move on the advice that the mentor is giving them, or they're still trying to educate themselves. So, making sure that you kind of do the legwork. So that way, when you are ready for your mentor, you're able to move quickly with the feedback that you're receiving. So I do think that it's helpful that you took that step up front to get into a deal passively, learn, a little bit from that standpoint. But when you're ready to accelerate and put yourself in a position to truly lead, that's when you went out and got a mentor to help you take that next step. That's a great point.
exactly. And I could come to that mentor and say, hey, I already know what a real estate syndication group does. I know what a value add investment is. I know how to do underwriting and due diligence. So come help me go to the next level. Help me meet the people that I need in order to continue this trajectory in my career.
Yeah.
And in that light too, one of the things that I do, and one of the things that I've really learned is that in this business is about creating value, whether that is value in your property or value within the other people that you meet. If you can add value to somebody else, then you're growing in your business. And so one of the things that I do is I have a real estate investment club that meets at my place of work, which is I'm a software engineer at Intel. And we have a group here. There was around 143 people that were registered to go to the last event. And we bring in guest speakers that do general real estate education. I make sure that it's not a sales pitch. It's purely educational, and it's there for people to learn. And providing education to people not only is a great way to meet people that are interested in the same things you are, but it's a great way to take the knowledge that you have and share it with the broader audience. And so I've really enjoyed doing that. I do offer a one-on-one call to people that would like to start real estate investment clubs at their place of business. So I'm working with a person at Hewlett Packard and another person at Nike, and they're building out their investment clubs there and finding people that they can work with. And so I just want to throw that out there as well. If anybody listening to the podcast would like to contact me about that, they're certainly welcome to. And it's just one small way of giving back.
I love that because so many people who are listening maybe work in corporate America, and many of them who are investing or interested in investing, really want to keep them almost separated, like church and state, right? They don't want their employers to know, and they don't want their coworkers to know. And the fact that you are bringing people together and helping to educate them, bringing in speakers, you're really empowering the group. For someone who is thinking about something like that, can you just maybe give a little bit more context to your story, at least, and how did you start your group at Intel's campus?
Sure. So I like the comment that you made about separation of church and state, because there is a fine line that you have to walk when you have an outside group at your place of work. And the first thing that you need to do is you need to contact the HR group within your place of employment and understand, hey, are clubs that are not necessarily work related allowed to join to meet and to meet on the campus? And Intel is very open with those sorts of things. They have a great place to work program. And so I found some of the people that were running the Great Place to Work program, and they basically provide, tickets to movie theaters. There's a choir that Intel has. They have lots of outside interest groups that basically promote a healthy lifestyle while you're working. So it's a way of providing benefit to people that are working there. So once you find the right people within HR, work with them to help them to understand what you're doing. It was key for us that we made clear that we were an education club, not investment club. We were not selling anything, and we will not let anybody who is selling something present at our club. So it is for educational purposes only. And then you also want to be sensitive to the time that you spend on the club. Obviously, you're there at your place of work, and you should be working at your job, not working on a side business at your job. So I do all of the finding of people that are going to speak after hours. And we do take 1 hour on Friday at lunch, each Friday, to hear from a guest speaker. And so that's when our club usually meets. And so the really important thing is working with your HR group, finding people that you can bring in that will add value to your colleagues' lives, and making sure that you maintain a healthy balance that is out there in the open for everybody to know. So let people know that you're doing this, and that it's something that's going to improve the quality of the work-life experience for people that's there.
Yeah, I think that's great tips there, because you definitely want to make sure that it doesn't get in the way of your day job. And I think you have to make sure that that's clear with, your leadership, your HR department. It's really an outside interest. But again, something that could be really compelling. And I would say too, even if it's not just directly at your job, it might be industry related. So if you're an engineer, software engineer, maybe there are other software engineer groups where you could bring them together and, find ways to talk about investing or, things like that. So there may be other ways to tap into either colleagues, coworkers, or other folks in your industry, because ultimately those are going to be some of the professionals that are relatively easy to connect with, because you all share a common bond from an employment standpoint, or what your passion is at work. And even if you're not passionate about that, there are probably other people who are not passionate about it too, who are looking for other opportunities. So if you can start to bring people together and educate them, that might be a nice way to start to build kind of an audience and build your network.
One of the other things you can tell to HR is that here we are building a thought leadership platform, where you go out and you make yourself more known for the purpose of educating people. But that's also raising the company's profile as well. If I go out there and I say that I'm an employee at Intel, and I also work on a investment club on the side, then people that are interested in that investment club also ask me about what I do at Intel. And I'm part of the developer relations group at Intel. So my job is actually to go out there and build communities for Intel. So that actually translates over very well into building communities of real estate investors also.
No, I love it when those skills and the things that you're passionate about kind of they overlap and make life a little bit easy to go out there and just focus on networking with people. It makes it really easy to build and grow. Great points there. So I know you run the Intel Campus Group. You also run W.I.N, W.I.N, the Wilamete Investor Network. Talk to me a little bit about that group.
Sure. So I met a couple that was doing a multifamily group here in Portland. And they actually are part of the Think Multifamily group, which is fairly well known out of Texas. And at first, we were running competing multifamily investment groups, meaning that we were going on to meetup.com or recruiting people to come to our groups and inviting outside speakers to come. And I was kind of on the west side of Portland, and they were more downtown Portland. And finally, we decided, I think that we should just have one group. And I said, great. So what we ended up doing is they took over the leadership of the physical group that was meeting within Portland. And then my group, which was the Willamette Investors Network, moved online. So we started a website. You can go to winmultifamily.com in order to find it. And it's a site for people that have W-2 jobs to go and connect with people that are actively involved in real estate. And when I say actively involved, I don't necessarily mean investors. We also have a lot of people that are brokers and insurance agents and those types of contractual professionals in the group as well. So it's an online network where if people want to learn about how to invest in multifamily or in mobile home parks, and there's also a part that does self-storage and other asset classes, it's a place where you can go online and meet people and educate yourself. So that's kind of the evolution of the Wilamete Investors Network. For those of you who don't live in the Portland area, the Willamette Valley is the valley that Portland is located in, so that's how it got its name. But we shorten it down, of course, Wilamete Investors Network. We're the W.I.N Multifamily Show and W.I.N Multifamily Network.
Well, I love it, except for the fact that I said Willamette and you said Willamette. So clearly I completely mispronounced that. So Willamette is not the way I would have read it, but okay. So we got that right. Hey, so Daniel, I want to go back to markets, right? So you're based out there in Oregon. You've invested in Texas. Talk to me a little bit about the Texas markets and kind of, what your process was investing in Texas from afar. What kind of process did you go through?
Sure. So I partner with people that are looking to invest in multifamily real estate. And I also partner with operators, people that are actually going and finding the properties and rehabbing them and bringing them full cycle. So the first thing that I do is I do a lot of education with people that are looking to get into multifamily investment. But then on the ground, it's really important to qualify the people that you're working with. So in this particular case, I knew the broker that was there. He was out and actively, it was his full-time job, just going out and talking to people that were selling property or brokers that were selling properties. And I got to know him really well. And then the other thing is that this group also had a property management company, and they did all their property management in-house through this company. And it was all located within the Houston area. So they knew Houston really, really well. And as a person who goes out and partners with people to fund multifamily deals, it's really important that you know the operator that you're dealing with. So the operator should have specialized insight into a particular area. They should focus not on a general broad area, but a specific region in which they're executing in. And so for me, being a person who finds investors, the most important thing that I could do is find a partner who knows their area extremely well and who's executed for a while in that area.
And Daniel, did you start with knowing that Houston is where you wanted to focus, or did you start with knowing that this partner was who you wanted to partner with?
A lot of that's just serendipitous. I found the partner. I knew that Houston was a great area, and so those two things happen to coincide. There are a lot of other great areas out there. Atlanta's booming right now. Phoenix is booming. Jackson, Florida is booming. Colorado Springs. There are a lot of great areas to invest in. And there's good material out there to help you decide where to invest in. You want to find a population that's increasing, jobs that are increasing, crime rates that are dropping, those sorts of statistics. And if you can find people that are operating within those metros, that's how you go about finding them. So in this particular case, I found the operator first, and I knew that Houston was a great area to invest in. So that's how it came together.
Got it. And that was very helpful. I wasn't clear if you wanted Houston first or the operator, but that makes a ton of sense. So then as you kind of progress on, you've mentioned a few other markets that are really strong, solid markets and great opportunities. Are those with different operators, or is that going to be with the same operator?
So those are with different operators. So in the Atlanta and Jackson markets, I work with another operator, Grayson Capital Group. And they're actively investing in those areas in particular. And for instance, I found an operator who knew the Memphis market extremely well. And I decided, honestly, not to partner with them because I didn't like some of the fundamental population growth projections in the Memphis market. So once you find people that are operating within those markets, you really do need to do your due diligence on the markets in particular to understand if that's an area that you want to invest in. And one of my personal beliefs is any area that I look at to partner with operators in and to bring investors into, that needs to be an area that I am personally investing in as well. So I will never do a deal with investors that I am not personally in, and investors should have that as one of their criterias. The people that are setting up the deal should always be personally investing in that deal. So, yeah.
Yeah, so you talked about a few of those different markets, right? You mentioned Memphis not being a market that you wanted to be in for various reasons, primarily looking at some of those population numbers. As you start thinking about, the scale, and as you transition from working with one operator to the next, what are either some key learnings, some key differences, some lessons learned from going from working with one group to the next group that you kind of had to adjust in your understanding as far as what you were looking for and what you like?
Well, I have a mantra on my podcast, and that is investing is a team sport. Real estate investing is a team sport, and the operators are all about connecting and having personal relationships with people that are highly professional. So when you go out and find somebody, obviously they should have the basics, like they should have several deals under their belt. They should have operated well on those deals and returned a good distribution to their investors. They need to be people that know their area inside and out and can tell you why they're investing in that area. And so it's not, you get a sense for somebody who really knows their area and is really passionate about their area. And you can understand very quickly whether that's someone who's going to be great for you looking in that area. So in the case of Grayson Capital Group, they have 1,200 apartments in the areas that they're marketing in. So they know the area extremely well, and they're continuing to look for deals in that area. So going back over their previous deals and looking at their track records, you can say, okay, they've been operating and returning great investments to their investors. And these are people that I want to work with going forward. And the other thing too is you need to have a personal relationship with those people. They need to be someone you can call up on the phone if you need to ask questions. They need to be people that are responsive to you. And so that's one of the things I love about real estate over the stock market, is that it's a personal business. It's a business where if you're involved in an investment, you can call them up and ask them questions. You can get answers over email. So that's one of my favorite things about investing in real estate.
No, absolutely great tips there. And I love the point about it being personable. It really is a person-to-person business and relationship. And it's really a critical aspect of how to grow here, which is very different than the stock market, where it's kind of cold and you've got people just trading and you look at the numbers and you go, this is definitely all about the relationships. So Daniel, we're going to transition to our bullseye round. And are you ready for that?
I'm ready for it.
How has a failure or an apparent failure set you up for later success?
So one of my failures originally was the starting of the Wilamete Investor Network. I started that group, and on our first meeting together, I think we had 15 people or so. We took a nice picture and put it up on Facebook and said, hey, here we are. And then in the second meeting, I think we had 3 people. And so the one of the things that I realized from that is that you're not always going to have success with everything you do. And when you do, it's how you react to that determines what type of investor you're going to be. Are you going to continue, on in an activity that doesn't show its benefits for a long time in order to get to a point where it will? And so in this particular case, we decided in a strategic change, we sent all our members over to the other multifamily group that was there and moved online. And now I've added that group that was in Portland. They now have an online presence because we're partnered with them, and we have a joined group. And so we have larger numbers and can attract better speakers. So going through that initial disappointment of not being able to find people in the meetup was a big learning experience, and it really made me understand that perseverance is key in this as well.
What is the book you've recommended or gifted the most in the last year?
Oh, you know what? It's got to be Napoleon Hill. So a lot of people that talk about Napoleon Hill, he was one of the original mindset mentors. And he is somebody that I recommend to almost everybody because visualization of your goals is going to be key for attaining them and keeping them in the forefront. So,
give me a digital or mobile resource you recommend for your business.
a digital or a mobile resource that I recommend for business. So one of the things that I like to do is look at the hyper locality of a particular area. Let's say you're focused in Houston. There are a lot of different areas within Houston. And so being able to know, do I want to be on the north side, the south side? What are the different statistics that are in each of those areas? There's a website called bestplaces.net that you can type an area code into or a zip code into, and it will give you a breakdown of the demographics. It'll give you a breakdown of the marriage rates, the jobs and economy, everything that you want to know about a metro. And I find that it's a great place to go if I want to understand, hey, what is this area like? And you can do it really quickly. So bestplaces.net.
What is a daily habit that helps you stay focused on your goals?
Daily habit, I actually practice yoga on a daily basis. So this is not only to help me with my goals, but I actually have a back injury. And one of the things that I've had to deal with on a daily basis is, chronic back pain. And so being able to sit down and focus on stretching through that pain is I find it very growing. And I relate it also to some of the growing pains that I have in my real estate business as well. Sometimes you are pushing through and trying to break through to the other side. And so I do a fair amount of yoga and meditation in the morning.
What's one thing you know now that you wish you knew when you were starting out?
As an engineer, I suffer from wanting to do it all myself. And that's how I've operated as an engineer for a long time. You work on a project and you complete your portion of the project and you do the absolute best you can, but you don't tend to work in teams. And so one thing that I wish I knew when I was first starting off is that it's a powerful thing to be able to work with people that know more than you do.
What are you curious about right now?
Boy, what am I curious about right now? So I'm usually curious about just meeting people. So there are so many people that are out there, and there are conferences that you can go to find people that are doing incredible things. So one of the things that I really enjoy doing is meeting people and working with them.
All right, so we've talked about you in the Portland area. I was trying to say Portland, Oregon, and Portland area, and kind of jumbled up together. So we talked about you in the Portland area. I want to know your favorite place to grab a bite in the city.
Oh man, Voodoo Donuts has got to be one of the most popular places in Portland, Oregon. Everybody who comes to Portland goes there. It's a sugar rush, if just a heads up there. But they're incredibly famous. Look them up if you haven't seen them. They have some, shall we say, interestingly designed donuts, and they're definitely a party hit.
You said Voodoo Donuts?
Voodoo Donuts.
All right, Voodoo Donuts. We'll definitely link to those in the show notes. Well, listen, Daniel, you gave us a lot of great information, some great tips here. How can our listeners get in touch with you if they want to learn more?
Sure. So my name is Daniel Holmlund, and you can email me at daniel.holmlund@aloncapital.com. That's AALON capital.com. And my website is also aloncapital.com.
Excellent. Well, Daniel, you talked to us about really how to get into that first deal as a limited partner. I love the way you kind of transition from limited partner to general partner side, and then bringing on a mentor to help put you in a position to lead your own deals. Absolutely love the way you've really tapped into your workspace and really tapping into your colleagues, creating your investor network and hosting those educational events, which I think is a brilliant idea for anyone who is looking to connect with their colleagues, especially if you're at a large firm. If you work for a large company that is focused on being a great place to work, this is something that you can look at tapping into. So great tip there. And really just overall in the way you talked about vetting sponsors, vetting operators, vetting markets, great actionable insights for all of us as we look to grow our portfolios. Daniel, thank you again for coming on Target Market Insights. I know you and I will be seeing each other soon, so look forward to that. And we'll talk to you again soon, okay?
Thank you, John. It's really a pleasure.